Dear all, I welcome you all on behalf of Atal Innovation Mission to this session today. AIM is happy to bring to you another session by Mr. Nishant Malhotra to understand and explore the concept of sustainable finance, building on from the previous webinar. I'd like to introduce Nishant again for our viewers on YouTube. Nishant Malhotra is the founder of the social impact startup Middle Road OPC Private Limited, a social enterprise enabling social change and impact within the society. It's a one-person startup, and Nishant is the founder, director, and CEO of the venture. The startup has an online platform, The Middle Road, www.themiddleroad.org, and focusing on online media and e-publication, educational tutorials in social consulting, advisory, and knowledge management. Nishant worked extensively in India, predominantly in the financial services sector, and has a master's in public domination degree from University of Michigan, Ann Arbor, and master's in business administration from CEIBS, Shanghai, China, and SIBM, Pune, India. Welcome, Nishant. Before I hand it over to you, I'd like to request our audience on WebEx to please make sure that they are on mute when not speaking. We shall try and cover as many questions at the end of the session. Thank you. Nishant, over to you now.
Thank you. Thanks a lot. First, I want to thank you for giving me a wonderful opportunity to speak here. So let's start the session. Before I start the session, I want to, really stress on the factor that the sustainable finance actually is due to the importance of sustainable development within the society. So we'll look at why we are going to be talking about sustainable finance. Why is it so important? Whether you are an incubator or a startup or any actor within the society. So just to give you a brief of, I'll just tell you a bit about the Middle Road. So the Middle Road has got an online media and e-publication arm. It's also got an e-learning section and edtech section, which I'm building up. So when you're talking about the online media and e-publication arm, it's also got a guest section. So you're very welcome to write. I always request enablers. It's basically usually it's edited before it gets posted, so you could look it up. You could write if something you're enabling within the society. It's got a guest section, and you're welcome to post your work under the insight section. So let's begin. So when we talk about sustainable development, we talk about sustainable finance. Now the idea is, why do we want to know about sustainable finance? So sustainable development today is mainstream. It's a holistic vision which is incorporated within the society, within the business. So the first is, like, you need to understand business sustainable development. You have to understand a bit about sustainable finance, which is slowly, as we go forward, we'll understand the concept of ESG is becoming mainstream. As a matter of fact, I'll say it's very mainstream. You understand the intersection between the best business and sustainable practices. So that gives you a very good idea of how business and social good interface works in. So you have something known as corporate social responsibility. So when you're building up an enterprise, you're building up a company, you want to build up a world-class company, you need to have a DNA within that company, and it comes at a very early stage. So this is going to help you go forward, not only help in raising capital from the capital markets or from investors, it will help you as you grow up to become an integral part of the society. So when we are talking about startup ecosystem, we have various actors. Every actor within an ecosystem, I would say, is going to be enabling Sustainable Development Goal 5, which is gender equality. So gender equality, in a way, everybody is enabling, because if you look at the definition of United Nations, you will have less exploitation of gender of even women if they are employed. Not only if they are employed, they need to have a decent job. They have to have an equitable job. So you are also enabling SGD 8, which is decent work and economic growth. These are some of the ones which I'm directly taking. You have SGD 9, you work in innovation, industry, infrastructure, which directly relates. I've put 11 as a question mark. And the reason is, like, 11 usually is my date of birth, and I've kept it. Why I've kept it is basically you're building a sustainable society in cities. That's what it stands for. And we'll go in at a later date when we look at a product, how it is enabling different types of SGDs. When I'm talking about SGD 17, now this is the most important. Now, when you're talking about SGD 17, it talks about partnership for goals. So this is where you have public-private partnership, and public-private partnership is an enabler for sustainable finance. Now, this is one of the key goals, and this is one of the key enablers going forward in the sustainable development sector. And we look at, as we go forward, we look at some of the milestones. So I hope I'm pretty much audible right now and it's clearly visible.
Yes, Nishant.
Okay, sure. So I'll try to be. This is very detailed presentation. So I'll try to keep it till 40-45 minutes because we need to cover a lot of data, a story. There's a storyline, and so then we can have a question Q&A of 5 and 10 minutes. You could also do that. You're always welcome to interrupt or just raise your hand and let me know, and we can interrupt and have a candid discussion. So the whole idea here is that you would have a very good knowledge after this particular presentation is what you're standing for sustainable finance, how it has evolved over a period of time, and why it is very important for you as an actor within the startups ecosystem or within the development ecosystem or within the society to have a fair bit of understanding on the trends which is evolving in sustainable finance. So let's begin. So today, the agenda would be what today the agenda would be to understand how ESG has evolved over a period of time. So whenever talking about ESG, and we see what ESG stands for, I'm also talking about sustainable finance. So these two terms are very interchangeably used around the world. And for this particular presentation, I'm using ESG as a part of, as equivalent to sustainable finance. So we understand first what is the latest innovation within the development sector related to sustainable finance. We understand products and tools used in capital, attracting capital from private investors. So this is, you'll get a fair good idea as we go forward on these particular points. So when I speak today, we'll take a look, a peek at ESG trends. We'll look at sustainable bonds, what we mean by sustainable bonds, what are the different kinds of sustainable bonds, and then we'll also look at impact bonds. So this is predominantly the three parts. In between, there is a cameo. So in any movie, usually have a small cameo, and we'll look at that cameo in terms of something which is specifically designed for early stage startups, which is venture funding. So there was a lot of top last time that topic came in, so I thought let me put 2-3 slides on that particular aspect. So when you want to need to know, so you need to build an ethical business. One of the better things which will always be coming is governance. You need to focus on corporate social responsibility. That's become so important in today's world. And specifically after the pandemic, we have seen it sort of directly enforces your interest in ESG. So I have taken this slide because of governance issues, and I suggest that you look at it. It's a movie which is a It's a docudrama, I would say, which is "Are You?" Is about social dilemma. It's on Netflix. It's won a lot of awards. It gives you a very good idea how we are going to be moving in the digital space. So you might not be using a smartphone after this, but just to give you a fair idea how governance is becoming such a mainstream issue if you look globally. So now, recently we heard about the World Bank and the European Investment Bank. They launched a $4 billion climate finance. City Climate Finance Gap Fund. So this is, of course, to enable finance and develop climate-friendly solutions for urban cities in the developing world. So when you understand the whole idea of how different multi-development banks, supranational organizations are coming in today, you see how things have changed within the development and the global sector. So what is sustainable finance? Now, IMF defines sustainable finance as incorporation of what is ESG principles, environmental, social, and governance principles into business, economic development, and investment strategies. So when we are looking at a pie, we are looking at a very broad sector of whole agenda which we are talking about. So it's not limited to only very small things. It's looking at a major things. So let's look at what is ESG. So when we are talking about environment, we are talking about climate change. We are talking about climate action, which is SDG 13, so it becomes so important in today's world. We're talking about renewables. So we're looking at a lot of sectors which are, if you look at the startup space, a lot of sectors are only working in this particular space. So this itself becomes a major issue or a major enabler for a lot of startups around the world. So when we're talking about environmental, we're talking about natural resources, we are talking about efficiency management, we're talking about waste management, we're talking about transportation. So that's one of the reasons why I'd shown you. Now, transportation initially was maybe in the public domain. Now you're attracting a lot of capital to get more public and private sector to come in this particular sector. So when you're talking about environmental, we are talking about green buildings, we're talking about clean tech. So these are some of the examples we are talking about environmental space. When we look at social, when we are talking about social aspect, we're looking at underserved markets, we're looking at less privileged people whom you have to come and support. These are marginalized communities, these are civic societies. Now, an example good could be affordable healthcare, it could be microfinance. These are issues which how you will reach out to the underserved communities, particularly within the society. When you're talking about governance, now this is becoming a huge issue, specifically in the digital space, and it's got a predominantly well-rounded view around the world. There are a lot of actors coming around the world, and now they're feeling that the corporate governance issues is becoming mainstream. So this corporate, it could be corporate behavior, corporate governance, disclosure issues, data privacy laws, which I talked about. Now, today, when you're talking about data privacy laws, this is by far one of the most important aspects of business. So when you have asset managers who want to invest in, you will understand that they might not be investing in companies which have do not fall into the ESG bracket. And that is why you come to understand how important it is to understand what is happening around the sustainable finance. So when we are talking about sustainable finance, why are we saying sustainable finance is mainstream? Because it's playing a pivotal role. And as we go forward, we look at the amount of assets under management. It's humongous when you look at it. So when you look at social finance, it's rising fast globally. It's becoming mainstream as we go forward and we look at it. So we start the story with some of the biggest enablers and milestones which happened in the ESG bracket. So the first, and of course one of the most important, is principles of responsible investment, PRI. Now this is one of the leading champions of responsible investment which happened. Today there are more than 3,000 signatories. It started with about 100. This is the photograph, and it got you have Kofi Annan from United Nations. This was launched in April 2006 at New York Stock Exchange. So it works on 6 core principles. This was one of the most moving factors which came in to have investment implications of ESG factors. It supported the network of signatories and sort of laid down a framework for responsible investment, which was actually the what was the importance is the responsible investment were predominantly investing with companies with high ESG factors. So if we look at the assets under management, so assets under management is what you would be is basically you have two kinds. There are two major actors when I will be talking about. One is asset manager. Whenever I'm talking about asset manager, it is basically you could take the top 3 asset managers, or you could look at asset managers like Vanguard, State Street. So these are who actually take in money from the public. They are like they'll have mutual funds. They'll have different types of products in the market. These are known as asset managers. When I'm talking about asset owners, these are like common pension funds. It could be the pension fund of Japan, which is one of the largest in the world. You have CalPERS, California Retirement Fund, which we are talking about. So these are two kinds of assets here which we have shown. Now, if you look at the assets under management, is sort of the investment amount which they have under them, is actually gone more than $100 trillion. Now, this is roughly the amount just with the asset managers, and according to who have come under the PRI, who have signed it. So just to show you how big that size is. And in my previous presentation, we have seen at least by the end of 2019, the size of global equity markets which are listed was less than $100 trillion, just to give you a fair idea. And of course, the bond market is a bit bigger than that. And we'll come to different figures. But before that, let's go to one of the most interesting slides here. It's one of the most informative slides. Is how are these some of the milestones? These are not the only milestones. These are what I have selected. These are just some of the key milestones. There are also a lot of other very important milestones which this slide does not cover. But let's come up with some So when we look at the launch of Domini 400 Social Index, this was the first time when responsible investment companies, looking at ESG factors, which would later ESG term would later come in during Who Cares Wins. So this was one of the times when you had an index where you were tracking 400 companies across sectors. This is basically bringing out to US companies, IMI index. There are more than, I think, 2,000 companies in here, and it's predominantly about 99% from what I know about the listed capital space in the US, and it is across small, medium, and large cap. And this is the first time the ESG was important for companies to be coming within this index. So I think this started in, and there were a lot of things which happened before and after. You also had UN Global Compact coming in, but in 2005, Who Cares Wins was the first time multiple set of actors came in around the world. I mean, this was done, driven by United Nations, and during this period of time is when the coin of ESG coin took place. And then you had 2006, where the United Principles of Responsible Investment came in, and that's what I was talking about. In 2007, European Investment Bank launched the first green bond. This was linked to climate awareness bond, and this was a game changer. This was the first time you were coming in with issues which are really close to. You had a bond which was for the first time linked to a cause, and that was an environmental cause in this case. Now, in 2013 was the first social bond came in through IFC route. Now, this was strictly not a social bond because there are a lot of the bonds are usually have a framework which was formed by 2017, and we'll come to understand what a social bond is. But this eventually became a social bond. IFC came with another bond, and these two bonds would ultimately, form in 2017 would also come in. So this was, you could say, technically the first social bond issue. Then you had Paris COP21. Now, Paris COP21 is the first time the Paris agreement came in, where you were targeting the global temperature should be go less than 2 degrees, which is the pre-industrial times. So this started a forum, a collective goodwill, which I would say in the whole society within in the global arena. So this was when there was a huge thinking change among the one that okay, let's make climate as a huge issue, and that's when it became also mainstream. Now, when we look at 2015, you had Addis Ababa Action Agenda. Now, when we talk about Addis Ababa Action Agenda, this is by far a very important moment on a lot of aspects. One, it drove multilaterals. When I'm talking about multilaterals, multi-development banks, it could be Asian Development Bank, like talk to TIB, World Bank, IMF, even EIB. So all these banks, Inter American Development Bank. So there are a lot of banks who came together. There was close cooperation among them. They wanted. They came out with steps to attract capital from the development sector, for the development sector from the private sector. This was also the time when the first global infrastructure forum was formed. I mean, so this was a huge corporation. So this movement did one thing. It tried to bring in cooperation between the societies, or you could say between different organizations. It also started a lot of facilitation between South and South, which is known as Global South. These are developing economies. So technically, graphically, what it meant is like the economies within the northern hemisphere usually are advanced. However, that was not the criteria. The criteria were based on selected types of how number of selective criteria, and out of that, it sort of brought in more cooperation. Number two, it also gave a lot of other aspects, and that's why it's one of the major milestones when we go towards the sustainable finance movement. Then in 2015, another remarkable things, that's when the millennium development goals are replaced by sustainable development goals, and these are a set of 17 goals. Now you had a very detailed criteria coming in, and you had an anchor. There was an anchor point before, but this was by far a much more anchor point, and these had specific goals to remove it. And this was a major change within the mindset of the people. So United Nations Sustainable Development Goals was one of the major moments, which really stepped forward. At least multiple actors had now a target to achieve. So among that, 2015, 2020, a lot of other developments happened. You had a lot of champions coming in. However, the major news which you see right now is EU is one of the biggest supranations in the world. It's basically have, I think, around 27 member states. Now it's come out with a social bond, which is under the shore uh, implementation criteria. And it's about $100 billion bond. Now that is actually an absolutely game changer. It targets basically safety of jobs during the pandemic, which is created, and get temporary jobs, or at least put a to the help the proceeds of the bonds would go into initiatives to preserve the jobs and make the jobs safe. So this is by far one of the greatest milestones in the modern era. Now, so it just came out with the $17 billion issue, just to give you a fair idea. And we'll go forward, we'll talk a bit about this more when we discuss social bonds. So just to give you a fair idea, when we talk about sustainable finance, and we keep on talking about it, so sustainable finance, I've just put out a very broad link. We have put equity markets, we looked at mutual funds and ETFs. ETFs as exchange traded funds. So these are funds which are listed on the stock exchange and trade, so you can buy and sell, which is a bit different from the index funds. And but they sort of track an underlying index. You have fixed income markets. When we are talking about fixed income or debt markets, you have sustainable bonds, which we'll discuss about it. There's something new coming, which is sustainability linked loans. So sustainability bonds are this the new sorry what has come out is sustainability linked bonds very recently, and they're sort of inspired by sustainability linked loans. Then I talked a bit about securitization and offshore bonds. So when we saw my last presentation, we touched quite a few of these points. So today we'll just go a bit into venture debt or venture lending. We looked at some of some are project based fixed income instruments. Then you have alternative investments. We look at impact bonds today. We'll just touch about it. It's very interesting. Another innovation which has come out, and have a detailed presentation or a detailed tutorial on this on the middle road. There's also a detailed tutorial on sustainable finance, but this is by more updated. And then we talk about impact investors. You talk about VCs, you talk about seed, you talk about angel. So this is the side which a lot of startups are very interested when they're attracting capital. So just we'll not be talking about green REITs today. So we'll be touching some of the topics, and the main top issue what we'll be discussing today will be sustainable bonds. So we'll be talking about impact bonds, and we're looking at venture debt. So last time people, startups were really interested. How would they go? And so this is one instrument which has come out, which you finance at early stage startups or growth startups to meet working capital requirement. Usually these bonds you will not have collateral, because as a start we usually don't have collateral. So instead of that, since they're taking higher risk, you usually have warrants, which are equity kickers. Now, this particular instrument is used only for short to medium term, and usually for companies who have already raised capital, either in Series B, Series A, Series B, Series C. So this could be a sort of stopgap in between them when you need to fund, because when you are looking for funding, and you go, let's say you have already got Series A and you want to go to Series B because you need more funds. So there'll always be an equity dilution. Now, this particular sort of debt sort of comes as a cushion that you might not be able to dilute so many, you need not be diluting your equity to the extent you might have done if you're not gone for venture debt. So when you're looking at venture debt, the good question is what will be the amount or what will be the price of the equity kicker? So these are predefined prices, which will be, you will be converting these prices to shares at one point of time. Now that could be the previous valuation. So that could vary, and so just to give you a fair idea. Now, equity debt has been in India. There are multiple sources and multiple figures, but I took one of the figures from Intracker, which from Venture Intelligence. So from 2008 to 2009, if you take it in $1 million, the venture debt has increased to 215. So $215 is what was till 2019. And you have some major plays. Now, if you look at globally the size, now this is a very interesting, like it's really coming up globally. It's gone to about $10 billion according to, so this is $10 billion. I've not written dollars, so it's US dollars. So whenever I'm using the dollar sign, it's by effective the US dollar, which is the benchmark which I'm talking about in the dollars. For example, if I'm going to be talking about Singapore dollars, I will very specifically mention that it's Singapore dollars or any kind of dollar, just to give you a brief of. So this gives you a very good idea of the venture debt. Now, when you're talking about different types of funds in India, now IV Cap Ventures estimates like it's about 600 million is the gap, $600 million. And some of the companies is Innova Capital. I've met one of the founders, at least briefly, during the Michigan alum meet. So you have, so they are basically been there. Trifecta has been there. Alteria is there. So Ankur Capital is also coming up, and Unicorn. Ankur also I've met in one of the Thai networks, and Unicorn India Ventures also. So these are some of the ventures you could look at who are actually going to be coming, with the venture debt. So you have Stride Ventures and Navi Technology. So Mr. Bansal, so that's his company, and they have also done a few deals. So to give you just a share a perspective that startups who usually are got a round of funding and they want to look at it, you could go in depth and know a bit more about venture debt. So coming back, so this is just sort of to give you a brief of, just a brief on the venture debt. When we come back to sustainable finance, we always talk about champions. So these are some of the major champions. You're looking for supranational organizations like United Nations, OECD, or you could also talk about multi-development banks like Asian Development Bank, African Development Bank, various kinds of European Investment Bank. Then you have champions. You have like Global Impact Investing Network. They also have a division of Iris Plus. I usually sit and they have a very detailed conversations where they're coming out with benchmark matrix for different sustainable themes. So it's very important. They have thousands of stakeholders involved in it. It's a very, very informative and very enlightening discussions. You can have and get to know a lot more. So you usually when you have bonds, you have a taxonomy, which is very important. You also have these third parties like sustain analytics. We've talked about Cicro, climate finance. Now these are third party who would look at the bonds and see whether strictly the bonds adhere to the framework which has been laid out. Now we should also talk about one of the leading champions is Secrets, which brought a lot of series, which brought in a lot of different champions from around the world, from leaders, to work on the sustainable front. So this was one of the first initiatives. It happened during the late 90s, if I'm not wrong, somewhere around that, before 2000, around 1991, 92 just formed. I'm not sure on that. So just to give you a very good idea of how the things have evolved. Now, when we will be talking about international platform on sustainable finance, this is where India, came in, also joined in. This was a very important moment. So these are some of the champions. I see these are selectively some of the major champions, I would say, which is driving the sustainable finance. Now, when we look at sustainable finance or investing market, which is like what you would say, so according to the GCIA, it's gone up to 30.7. This is actually, if I'm not wrong, in trillions of dollars. So it's not written, I should correct that. So this is about $30.7 trillion. So just to give you a brief idea, by 2018, this is the market size of the sustainable investing side. You have, if you want to invest in the ECG criteria, this is a part of what we are looking at, a market share over a period of 2016 to 2018. So just to sort of interrupt, I hope everybody's following me, and are there any questions? Hello?
No questions
Yeah.
yet. Okay,
Yeah.
sorry, there's this.
No, I'm just saying, like, yeah, it's going fine. We'll just wait for the end where we have questions.
Okay, right.
Doing
So,
good.
okay, fair enough. Thanks. Okay, so this is investing need to correct. So global investing top five regions for EU. EU has always been, one of the top, it's been a defining champion when you talk about sustainable investing and finance. US, Japan. Japan has done tremendously well ever since the government of the two top pension funds in the world, they moved to ESG. And that was one of the most defining factors in the sustainable investing space in the last few years, if I'm going to be talking about. Then you have Canada and Australia and New Zealand. So, this gives you a brief up of the. So, when we are looking at the strategies, some of the strategies which we are looking at are defined here, which are the strategies going up. So usually when we talked about sustainable investing, it's been there for a long period of time. It was basically negative screening. There were certain industries which you never went in. So this has been there for quite a few, for more than a century or so, for maybe about 200 two centuries, when people started coming, and there was negative screening specifically on tobacco and a lot of other sort of industries which you didn't want to invest in. But not that particular industry. This is, I will say, sort of a very passive way of looking at screening strategies. This is sort of going down. You have impact space, which is also community here, which has got a 33.7% growth. When you're talking about the growth, this is a CGR growth from 2016 to 18. This is again from GSI, which I've taken. Now, sustainability led themes is one of the most important rising parameters which is going in. You also have positive or best in class. Now, this is a very active strategy where you want to take the best in class of companies in that particular sector or particular segment in ESG practices. So this is very active and it's growing. So what's good is like this particular practice is going. Now, norms based is again in a way where you're looking at certain standards which will be laid down by United Nations or ILO, and then you map a companies according to those practices. Now, in that case, that particular also, but it's more of a passive strategy which is going. So this is another thing, is that world is becoming much more active. What I'm trying to drive. So this is corporate activism, for example, is going up now. That's like big pension funds, asset owners could go in, or asset managers could go in, and take active action against companies which they feel are not maybe following the rules of the game. Then you have ESG integration. Now, ESG integration is like you bring in your financial models, your discount cash flow models you're doing in, and you incorporate certain, practices within those particular models to integrate practically ESG integration within your whole modeling when you're doing. So this is predominantly another one of the most active, and one of it's also a rising strategy. So this is very interesting. So when we look at the basic kinds of global sustainable asset allocation space, yeah, so there are actually frameworks. One minute, let me. I just saw a question, so I'll just go down and look at the 1 minute. So there was a question here where there is.
Yes, Nishant, I'll just speak it out for you. Are there specific applications of frameworks, analytic strategies, which could suggest sustainable finance?
Oh yeah, there are. So you could look at this. I think one from Anderson. There are quite a few who have lived out frameworks specifically when you're doing a valuation part. Others you could look at, very specifically. You could incorporate on your own. For example, let's say you are looking at one of the ESG integration models could be that a particular company, as compared to that particular sector, does not have more than 50% of carbon emissions, does not encourage. So these are certain parameters. So you could always draft it looking at the companies. Just to give you an example, so there's a famous model by Mr. Anderson. I'll get back to you. So there are a lot of frameworks and models which are in. This is one of the frameworks which I'm talking about. I was able to answer the question.
Yes, sir.
Sure. Okay, so so I'll give you, so actually there are quite a few, when you're making a financial model, you could look at particularly how much is a particular company doing. You could look at different models. You could look at, it depends on what sort of criteria you want to give prominence. I spoke about climate finance. You could look at quality education. Is that company particularly doing, specifically it's in if that particular space, what sort of impact it has? Just to give you a bit, you could put those levers. I could sort of make a model on my own and come out, okay, this is the model which I feel I want to find it, looking at some of the SGDs. You could put SGD as a good barometer and see how companies are particularly behaving in that. So when we look at it, okay, so just to sort of say, when you're looking at sustainable investing asset allocation, still public equity remains a big thing. Now, fixed income is something which is really big, which is what, so in my predominantly the sustainable finance tutorial, which was done about, I think, 4 5 months, quite a few months back, I had already said that during the time of the pandemic, the social bond or sustainability bonds would be really big. I've written there sustainable bond, but sustainability bonds. Now that segment is going to go. So I feel like this is fixed income is going to play a major part going forward as more and more bonds come in, and they'll be actively traded at one point of time. So if you're going ahead of the curve, that is the way, a lot of startups will also get a premium. They will also be, for example, as a startup, you might be looking at, I don't know at what stage of growth you are in. You might be in 5 years looking for going to the capital markets and raising cash. This is sort of one of the major tools is bonds. So in a developed country, you have the much better ways is like usually the organizations rather going for a bank loans or different kind of instruments. You talked about venture funding, but could go to the market and go for issuance of bonds. So that is one of the major parts of the what I'm talking about. So we'll move on to sustainable bonds. Now this is a very important part. We'll go step by step. We look at various kinds of sustainable bonds. Now, when you're looking at sustainable bonds overview, one is green bonds. So green bonds is predominantly from where it started. It's basically, we look at in depth what it goes in. So when we look at green, then blue came from the green. Actually, blue bonds, when we're talking about, is basically for the oceans and targeted towards the ocean or marine ecosystem, I would say. So actually, green bonds also target that, but this is something which came out very specifically within that space. Then you have social bonds, which have become really big. So social bonds are predominantly, we'll also again look at what their agenda is. They, like I said, cater to with the social causes, social outcome. Now when you're looking at sustainability bonds, so this is when you want to give prominence to both environmental cause and social cause in both. So this is what a sustainability and SGD bonds have come in. And sustainability linked bonds, now this is something which has come in, and we'll talk about a company known as Enel, which came out with this particular bond. We look at, it's a step up bond which we say, and we look at how it was designed it. And then we talk about impact bonds today. So if you look at to the middleroad.org, I have a detailed presentation on impact bonds. Today we'll just touch upon it. We'll not go in depth, but we'll have a very fair good of understanding because India has done some credible amount of work in this. And I'll also tell you, I've just interviewed somebody who's done a lot of work in impact bond space. So and that's going to be coming out as a podcast. So when we talk about fixed income, these are regular fixed income instruments. We predominantly, basically tool they're basically also listed on stock exchange. For example, London Stock Exchange, they focus on environmental, social, or both themes. So we'll look at it. But one of the most important things is when you're talking about that is proceeds. Where do you use those proceeds? If I'm coming about the green bonds, I need to be having a clear-cut criteria of where I'm going to be using those proceeds. So they have to be backed. It's this particular things also change over a period of time, but there's ICMA is like one of the benchmarks which puts in lots of bond principles. So this is so you have green, social, sustainability, and sustainability linked bond principles. So these have to have that particular framework. So when we look at climate action, when we are looking at green bonds or green finance, so these are basically projects. Whenever you are going to be using these, you'll be going to the market and raising capital with these bonds. You're going to be using the proceeds for couple of for two basically two segments when you're looking at climate action. One is climate mitigation. It's very important. It's basically reduction of carbon footprints when we are talking about, and it's climate adoption, like how you're going to be adapt to the climatic changes. So let's take an example. So there's a lot of people, and there's a lot of confusion in this, and there could be a lot of times overlap. But let's, like, when we're talking about climate mitigation, we are looking at policies, or we're coming out with, for example, renewable energy space. We're going in, we want to reduce carbon footprints. We are doing initiatives which are directly reducing carbon footprint that will come to climate mitigation. So one, like I talked about, clean tech or renewable energy space, they're directly reducing. So that is also a good example of climate mitigation that could also be have sometimes climate adoption features in. We're looking at, let's say, sustainable agriculture. Now that would have a lot of components in it, could have something which is in climate mitigation. So climate adoption is, for example, let's say you are susceptible to the laws of nature. So you have droughts, you have various hurricanes coming in. So you take precautions. One would be, let's in a land which is faced by drought, I get a good irrigation system. So that would be a very good example of climate adaptation. So these all make in, for example, when we talk about why climate adoption is very important, is you look at, and you go back in history, if you look at the Mayan, it fell down because of drought. So because of how some of the it went through phases so of famine. Now you look, there's a very good book by Jared Diamond which comes out with all these various issues. So you come to know why climate adoption becomes so important, how you're going to adopt it. So when we are looking at these green bonds, when you are looking at the theme based bonds like energy waste, you look at the principles. Now the principles are set of there could be 4 or 6 set of parameters which you need to be, so they have to follow green bond principles. So it could be green loan, and there are a lot of champions, like there's a climate bond initiative which comes out. So you have these climate bonds taxonomy. You need to know whether how these bonds are going to be following those particular parameters. So they have to be backed by that set of standards, which I would say. Like I talked about before, blue bonds are a subset of green bonds, and they basically focus on marine ecosystem. So this is to give you a fair idea. Now, when we look at the bond issuance over a period of time, now this is data by Environmental Finance. It's a very important data. This is also one of the leading thought leaders in environmental space. Now, this shows that actually in 2019, the bonds which is the total sustainable bonds, were just $321 billion. But we know that EU we look at EU, and we look at a lot of other will be coming to companies. So I think there's one question which came up was when you about companies, and we'll be discussing that as we go forward. Let me complete this and we'll come back to that question. So we see that about in 2019 it was only $321 billion, just such a small amount. But we know now that Euro has come out with 100, which is going to come out with different bonds, which is going to be about $100 billion just in social bonds, right? 100 billion euros, that is. So it will be roughly arounding to $118 billion. So that itself shows that how this market is going to be moving in. So when we look at green bond issuance over a period of time, now this is an estimate by climatebonds.net. I don't know how much would it go in, but the green bond market did not do a lot good, also because this China is also one of the major issues of green bond. Did not happen much during the pandemic. So the green bonds did not really go to an extent which it was going in. I think over a period of time since its issuance, it's already gone above $1 trillion. However, if you look at the social bonds, that's the sort of segment which has grown. And we have, like I talked about, sustainability bonds. Now, one of the major reasons for, when we talk about green bonds is to think where exactly do the proceeds go. This is very, very important when you're looking at green bonds, where it goes. So this is a very good sort of, idea where it goes. And so we see that about 31% goes in green energy, then buildings is about 29%. So to make buildings more efficient. So just to sort of give you a fair idea how much it goes in transportation. So this is a figure of 2019 breakup. About 20% went into low carbon transport, then water, you have wastage, irrigation, and so many other things. So this is one of the, so when you talk about, for example, sanitation, right, this is very important. I mean, we have done one of the biggest movements. Now this particular bonds could be used in that particular segment as well. Just to give you a fair idea, when you're talking about green bonds, when you're looking at climate, you're looking at a lot of other spaces like waste. So you have to sort of stop wastage. And so when you're talking about green, it's not only like you're looking at just exactly whatever. It could be small increments which are actually affecting the capital. So now there was this question. So when we talk about green bonds in India, India is the second largest green bond issuer after emerging markets, after China. China is a big leader in the emerging markets, or it's sort of around uh, if you look at a lot of other classes, it's one of the major issues of green bonds. But India is now the second largest one of the. You had a $650 million issue in 2018 by State Bank of India. So the green bonds which came up, just to give you one example, was like 650 million dollars is a big issue. Now, when we look at it, we look at international platform. India joined it. There are 14 members. India also joined, not long time back, international platform on sustainable finance. So this is a very good move, sort of enabling move to move in particular sector. So when we go to social bonds, and again, I'll be talking about example here, and then I'll come to the question to see if I've answered it or not. So I have got different colors in, just wanted to get different shades when you're talking about different bonds. So when we talked about social bonds, and we talked a lot about social bonds, so what do actually social bonds do? What is the meaning of a social bond? They enable, develop, and implement new and existing projects with a positive social outcome. So when you're talking about social outcome, specifically for a targeted population, you need to be understanding this is basically a population could be under basically less privileged, underserved community. It could be like some people with disability, so or it could be people for elderly people. So this is predominantly for a targeted class. For example, it could be an affordable basic infrastructure, clean drinking water, sanitation, which I talked about. We could talk about access to basic services, healthcare, jobs, education. We're talking. So when we talk about that show bond which has come out by EU, it's targeting jobs. That's one of the things which how it's come out, and which goes within the social bond segment. So there's something known as also social impact bonds. So don't get confused with that. So affordable housings. These are some of the ideas we are talking about. So when you are looking at targeted community, it could be undereducated, people with disability, migrants, it could be people with the poverty line. So when you are looking at a social bond and you're looking at people who are very privileged and you say we want to do something, that actually is not exactly the idea of a social bond, right? So predominantly it has to be targeted at a particular community, or it could be a specific reason, like for example pandemic, a lot of people have lost a job, so that is a specific targeting a special cause when you're looking at it. So you could now follow, they have to follow social bond principles, so guidelines which have talked about. Now, when we look at social bonds, and we'll also come to side how much it's been issued. So till last year, it was about $20 billion. Now, when we look at it in this year itself, it has raised to about $10 billion by April. That was the time, and we already had a 17 billion dollar European issue of euros which have come in. So you could understand we have the this year, because of the pandemic, because of the social reasons specifically come in, we've already gone beyond that particular. So something really big happened before IFC came with a $1 billion issue. IFC has been a leader because that's how it came in. World Bank's IFC is it's basically specializes in getting private capital to the public sector. So it's been one of the most innovating multi-development banks in the world. So that came out until before the EU's offer. The African Development Bank is came out with the largest issue, which was about $3 billion. Then Ford Foundation has issued a $1 billion for 50 years on the social bond issue. Now that is unprecedented. That usually is like coming for such a long duration of bonds is something was unprecedented. And of course, Euro sure social bond we are talking about. So now again, to get you a story and to get you an example, now Shriram Transport Finance Corporation came out with a 500 million issue. So this was the first India's first social bond issue. To give you an example, if you look at the first social bond globally, is Danone. Danone is a French giant, and so that came out with the first issue in social bond. So just I hope I've answered the questions, or should I what I need to do is I have to, go back and check up if I receive the answers. One. Hello, am I?
Yeah, Nishant, should I speak out the question?
Yeah. Please do, because I'm not able to see.
Sure. Can you please talk about some company or organization stories where they have created social, sustainable, or green bonds? Also, some reference material to learn more about such stories.
Okay, fair. So green bonds, I think I spoke about right now. I gave you some green bonds as well as the social bond. The green bond, the first I told you was about IFC. Green bonds have come out with various a lot of organizations, and I could give you a sort of list of those organizations. As far as reading material, there are a lot of things on the internet. I have a full publication on sustainable finance where you can read a lot about green bonds, but you could go, so you have environmental finance, you have climate bond initiative website, it's a fantastic website. You could go and read so much there. Then you could also go to ICMA. So there are a lot of sites you can go to. So Morningstar has got sustain analytics, which I talked about. You could go to their site. So there's lot of material. You could actually, the best way also to learn is to go to all these Asian Development Bank, and go to World Bank, go to IFC. IFC comes out with a thought series, and I think they are some of the best papers in the world. They are very detailed. They give you very good knowledge. So when you're talking about startups, strictly speaking, it depends on which stage. Startups would not be able to sort of directly go in. I mean, it depends at what stage whether you got funding and not. So sustainable bonds, or when you're talking about bonds, the companies have to be a bit more matured with revenue models coming in, and so I would not be able to answer that as a question of depending on where the startup it is. But companies have been going. So you could look at also one of the podcasts which I did with Sholchpa Popule, so that spoke about how they use masala bonds to go to London stock market and raise cash. So, but then they got funded by two major impact investors, one from Europe, one from the US. So when you're looking at these are who are well-funded, startups, and then you have to have a very big names behind, so it makes it much easier for you to go and go to the bond market. So when you're looking at bond market in India, at this point of time, I would not know exactly, but I think it would not be much more matured when you go to be going in this particular segment. Because when you look at green bonds, I could look at SBI is like, I think we talked about coming in, we so not have example, only example which I have is electronica finance, but there could be other examples of startups going through the route. But I would say that this is by far, like I spoke about before, much more when you come out much more at a later stage when we're talking about. So let's go about to sustainability in SGD bonds, and then I'll come back to the questions after impact bonds. So one of the core mandate to implement both sustainability does both. So proceeds of could be either of the bonds could be finance or co-finance, a combination of green and social projects. They both follow green and social bond principles, but it should not be that one thing is undermining the other. So that has to be also kept in mind when you're looking at green and social bond. So this is sort of to give you a fair idea. Now this is another part which is going to go up really big as you go forward. So when we came out with stories and examples, so this is a very good example. So now NL is one of the world's most prestigious companies, specifically in talking renewable energy space. Now they had done green bonds before. So you talked about an example. So NL is a company which had almost done about, if I'm not wrong, $3 billion of green bonds before it came out with what is known as sustainability linked bond. So this is a different thing. It's basically linked with the KPI. KPI, when I'm saying, is a key performance indicator. So basically their bond came in with SGD 7, 9, 11, and 13. So 13, of course, is climate action. Now, what the target was is like we are going to be increasing. They targeted that they'll increase renewable energy capacity to at least 55% by December 2000, by December 31st, 2021, or 60% by 2022. Now, this was a 5-year bond which came out, and what the step up which we say is used is as a coupon, is that they were giving an effective rate of 2.650 with a yield to maturity at 2.676. So I talked a bit about yield last time, so we could ignore that right now. So all what the idea here is that they kept a standard. They said if we don't reach by 55% of the our total capacity to make it renewable by to 55%, will increase the payment of the coupon by 25 basis points. Now, 1 basis point, 0.01%. We discussed that in the last presentation, so just to give you an idea. So this was not new in the sense they were already sustainability linked loans. but this was the first time a bond had come in, which is directly targeting a KPI or outcome, which will say that okay, this is the outcome I need to go up by 2021, and if I don't get that outcome, I will pay you a higher interest rate. So this is a very good example. I thought this was worth discussing. This is something, at least I feel like it was innovative. So you could also look at impact. Now we come to the impact investment space. So when we took out impact investors, so now this is very interesting for startups. This is where, so when you're looking at impact investors, the difference is that they are looking either for social and environmental change along with the financial return, or both. It could be. So when we are looking at a lot of startups, specifically in India, they are predominantly doing a lot of work which could be impacting the society, either like in the social or environmental, and this is where they would come in. So these are who would come into startups. They will fund you. Of course, you'll have to have, there'll be a regular private equity, but those the thing is, these are prestigious names, or these are these are asset managers, I would say. Like I said, asset managers could be private equity, it could be a mutual fund, it could be predominantly institutional side, big funds which have the money, which we have talked about. Now, they would either invest in you. So this could be one way of getting invested for startups who are predominantly impacting something in the sustainable development sector. So this is very important. Although the market size is only $502 billion. Now, this is a figure given by Jen. I think it's April 2019. But if you look at the total wealth in the private space, is about $267 trillion, if I'm not wrong. So let's take it more than $250 trillion. So you could understand how much the gap is. And this gap is like expanding. And if you can just get 1% every year of the private capital to come into the public sector, that's going to be a huge enabler. That is what actually, United Nations and actually the prime role, which is the whole world is trying to go in with various actors within the development sector. Now, when I'm talking about impact investors, this is a direct benefit when you're talking about, companies. So there are a lot of companies which are getting invested by impact investors. So this is one way of startups getting funded in India, and a lot of startups are getting funded every. You could look at the figures, and it's actually the pie is just growing up. Now we come to impact bonds. So this is the last section of our presentation. When we're talking about impact bonds, now they're also part, this is a very small part of sustainable finance, sustainable investing. Although it's known as bonds, they're actually not bonds. I would term this as a quasi social quasi derivative instrument. It would be more like an exotic call option. I will not go into that also. What is exotic call? You could look at my presentation, or you could look at my tutorial on impact bonds on the middle road, and you'll get a fair bit idea, because this is going into options. But this is one of the ways to get actually really a lot of to get capital within the development sector through the public private route. So this is like third party investment you're coming in. This is also one of the offshoot of evidence based approach, and we look at one of the development impact bonds which got implemented in India. So this gives you, it facilitates evidence based approach toward addressing solutions in the social sector. Now, when you're looking as a startup, the sustainable sector itself becomes so much defining that you are either getting funded at an early stage through an impact investor, or there could be, if you're doing a project, you could be a part of an actor within the impact bond, or as a later on, you could be going to the capital markets route, either looking for sustainably linked loans, which might come in India. I'm not aware if they are till now, or you're going to the capital markets route. Of course, this will come at a much later stage, depending on where exactly, what your level of growth particularly has been right now. So when you're looking at impact bonds, so it's basically collection of impact investing, public private partnership concept which I talked about, and it's a outcome focus. It's basically pay for success. It is, if you achieve an outcome, then only you get paid, although there are other sort of structures coming in, but that is predominantly the idea. So what you're actually doing, why I've put blended finance, is like blended finance very interesting, is like you're getting various types of investors come in at different risk profiles, but who got a support. So there's something known as first loss of capital. Foundations usually give that, okay, private investor, you come in. If there is a loss, we are going to be sustaining a loss up to this particular amount of money. So just to give you a fair idea. We'll also not going to blended finance, but also read at the middle road. There's a whole publication, a lot of written about it. So this is basically payment structures to investors, which is what I'm talking about. So this is what an impact bond is. So when we understand an impact bond is a very good example. You usually, there are two types of impact bonds. One is a social impact bond and one is a development impact bond. The social impact bond, the payer is a government entity, and development impact bond, the payer is outsourced to a donor. It could be a donor, it could be anyone, but it's non-government entity. So let's look at a basic structure of a social impact bond. Development impact bond, the difference would be that the outcome payer will be a non-government entity. So let's say you have a government payer, you come up and you want to do a project. The intermediary in this case, so there are various kinds of social impact bonds. So given you one of these examples how this thing could be structured. You have an intermediary which comes in as a project implementer. It will go and raise money from the private sector. It could be impact of, it could be both combination of public and private or private sector. Then it goes to a service provider which will implement, which would like to do the project. The intermediary is involved in all the aspects here. It could be with the investor or with the government, coming out with outcomes, and then you implement the project. You have different kinds of interventions and you do it. Now you have an impact evaluator. This could be a third party, or this could be within the different, either it could be intermediary, or it could be different set of entity. There could be a lot of combinations, but in this particular case you have a third party which is coming out as an impact evaluator, and it's basically doing the impact evaluation. Then you have technical assistance actors like lawyers, academicians who come and put in. There's always a feasibility study which begins even before you want to come out with an outcome, because you need to know whether that outcome is really feasible or not. And then you see the outcome, and we'll understand what this outcome could be. It could be any outcome. Let's say you want to educate girls. In terms of educate girls, you wanted to there were certain targets. You wanted to educate girls of a specific age groups, various, it could be any target. If that outcome is achieved, then you're getting paid. If you're not, then there is no payment. Once you're paid, then the government would pay to the intermediary, and the intermediary then will pay you to the private to the investors. So this is sort of given. So usually the payment is given by payment plus interest. So this is to sort of drive transparency. It was to drive more accountability, that we look at we look at an outcome, and we are only going to pay if that outcome is achieved. Of course, there are fail-safe, that if you don't get that outcome, nowadays there are structures like Cameroon bond, one of the development bank bond, and from what I remember, 40% of the money would be given back, even if the certain parameters were not met. So there could be other mechanisms, but the whole point is like you get paid only if you are going to be achieving an outcome. And that is why, although it's a bond where you're taking the principal and you're giving back the principal as interest, it's based on an outcome. That's why this particular bond is structured like a quasi derivative. So just to take an example before we go to educate girls. Now, educate girls is so there are so when you're talking about development impact bond, which is like I said, the same as a social impact bond, but developer, but the pair is a third party, which is a non-government entity. So Educate Girls is one of the few development impact bonds which has been not only contracted but implemented. This has been implemented. So here the upfront capital was about $270,000, 70,000, and the maximum amount of outcome payment was also given. So this targeted a IRR of 15%. This is one of the highest, amount of money which you're looking at. It could vary from two, or maybe you can design a product which just give the principal back. Also, it could be. You could also limit how much you're going to be paying depending on the principal. I could say that I'm going to pay you back the principal, and if I want to give you as an incentive, I must not give you more than maybe 10% of the upfront capital. So you have a lot of flexibility to design the contracts. One good thing is like the payment is upfront. So to a service provider who's going to be doing or putting up the project for an intermediary, so you already have the money, and so you can come and implement the whole project. So that is something which is really, as a positive, which I would say. So here the outcome funder was Children's Investment Fund Foundation. Intermediary was Instiglo. Instiglo is the first one. So the first social impact bond was done by Social Finance in UK, and the first development impact bond which was implemented, and actually Educate Girls is the first impact bond was done by Stiglio, and then the impact the evaluator was ID Insight. So I just yesterday interviewed Roland Abraham, who's actually the India director and one of the co-founders of ID Insight, and they're doing some very, very exciting work. So we know that podcast will be coming out very soon, just to give you as a heads up. So when we look at the same structure, now this is very interesting. It's like I sort of wanted to build a similar structure. So here you had, like I said, the outcome pair here is not the government. This is a development impact bond. It's Children's Investment Fund Foundation, which paid. So the whole project was managed by Instiglio. UBS Optimus Foundation. Now there are three development impact bonds being done in. One has already been implemented, and the largest one in the world is also getting implemented in India. UBS Optimus Foundation has actually funded all three of them. This provided capital. So now you had Educate Girls, which is the non-profit, which is a service provider where, and you had a lot of the whole idea was to educate girls. They come to schools, just to give you a brief of these were the some of the parameters or the outcomes which I would say you were managing, or you were supposed to measure. So here the like I said, the impact evaluator was ID Insight. So the outcome, if there was no outcome, then you don't get paid, and you get paid, and out here the payment was then ultimately given by Children's Investment Fund Foundation. So like I talked about, there are three development impact bonds being done. Educate Girls is already done. Quality Education India. Now this is the largest. So this is, I think, raised about $11 million. This is the largest development impact bond being done globally. So development impact bonds usually are done in developing countries. However, so there are multiple actors involved in it. Tata Trust is there. Then Susan Dell Foundation is there. Susan Dell Foundation has actually implemented a lot in India. I also met one of the heads, Prachi Vingla. So she's heading of the Indian Foundation in India, and she I met her during meetups. And so this is one of the major development impact bonds being done around the world, and it's being done in India. So there are multiple entities. There are a lot of service providers. So there are three service providers being done. And the next is in healthcare. So healthcare sector is where India, this being done in Rajasthan for maternal and newborn healthcare system. So total three bonds, and two in the education sector. So what's the way forward? Like I talked about, how do we see the sustainable finance changing? First of all, sustainable finance is almost mainstream. It's become so much integral part that it will define every company, in whichever sector it is. Ultimately, to just give you a sort of an example, even if you look at it, Facebook was not included because of a lot of reasons with data violations as a part of ESG matrix. So that's been one of the examples of how such a huge big company was hit. Just to give you a fair idea how important it is playing in. So when you're looking at social and sustainability bonds, it play a very vital role in bridging the gap of private capital to find the pandemic. It will look at sustainable bonds, and impact investment will increasingly getting important, and impact investing will play a very, very increased role as you go forward in the startup sector. So if you're looking at, when you're a startup, this is going to be a part where, as a VC or a venture or a private equity company, you're coming in, and then you're an impact investor, and you're only looking at for it. But then your also criteria is going to be, there's a lot of impact washing, there's a lot of green washing, and you really need to know whether your impact investors are really impact investors, or if you're coming out with an issue, it's just to sort of a sustainability wash or green wash, or it's really that you need to be. So I think taxonomies and the guidelines will become more and more important. So these are some of the recommended REITs which you talked about. Of course, there are a few from here which I've talked. I've talked one of the ones majorly issues which I've used for investment, but there are a lot of REITs which you can look at it. So if you want to get in touch, you're always welcome to write to nishant@themiddleroad.org. You have the Twitter handle is also I've given you, and we'll just go back to questions. So we come to an end of the presentation. I think it's been a very lengthy presentation, and I think we better come to the questions part.
Thank you,
Yeah.
Nishant. We have one question from Dr. Shadulin Benedict. Are there publicly available data sets showing the performance of these bonds, especially for startups?
Okay, so it depends startups for what. For example, social impact, you will go to social finance. Social finance is database of all the social impact or the development impact bonds being done. Then you can go to environmental finance. There are a lot of paid versions where you can go and you can see around the world. So data is done, but I think it's you need to pay for a lot of data. But you can go to environmental and they keep showing you the performances of these bonds. Now, like I've already said, if you're looking at sustainable bonds, they might not be a very good fit, right, for a early startup. If I may, I think made that particular point. So if you are going into a bond route, you're looking at capital markets and you're raising debt, then you have to be at a particular size to go to the bond market to raise debt, and you need to have some sort of top end investors that would go on helping. So if you're looking at venture funding, that's a different thing. Like I said, from what I know, from what I've read, I'm not an expert, and you could look at it, but from whatever I have read, it's basically people who are usually venture funding would be who have got funded, but you could directly reach out to those companies whom I've talked about or mentioned in the presentation, and you can connect with them for venture debt.
I hope that answers your question, Dr. Benedict.
Hello.
Hello, can you hear me?
Yeah.
Yeah. So, Nishant, thank you so much. There are no other questions. I think you took most of them during the session itself. So that's great. I think we can conclude. Any closing remarks from your end?
Yeah, sure. Thanks a lot. First again, giving me this wonderful opportunity and interacting. And I hope I was able to communicate what I really wanted to. I just wanted your reaction is how was it? Was it we went through a lot of examples. Was I able to sort of okay? So there is one question which is it limited to EU projects? I really don't know what is the whole quantum of this chat. Is it? Okay, and
I'll just repeat the whole question for you. Whether startups have to provide green or social bonds in their proposal, do investors consider it seriously, or is it limited to EU projects?
no, see, the sustainable bonds are global. It's nothing to do with EU, and EU just came out with the largest sort of issuance under a short category, which is predominantly limited to it's about jobs, job protection. But when you do go, like I've already said, startups, depending, I don't know at what size you are, might not be the exact fit. Right now, it could be in sustainable bonds, but I think companies have gone in, but it's not related to any EU things. So it's nothing to do with it's you can go anywhere, whatever company. If you're doing some work within that particular sector, your project is targeting particular that sector, you're eligible.
All right. Thank you. So I take this. I think Dr. Benedict also agrees with the answer. So thank you so much. So I'd like to close the session now. Thank you so much, Nishant, for this very, very informative session. I'm sure that all of those who attended the session have learned something new today. So thank you for that. And I'd also like to thank our audience here and at YouTube for joining us today. We greatly appreciate your active participation. Thank you, everybody. Thanks, Nishant. Stay safe.
Thank you.